This is why Apple stock has been holding the 130-135 support area. Yep, that's right, it's hovering around the stock's fair value. I have proof of why that is for several quarters now. You can check them all, but it all boils down to one thing: my valuation summary, specifically the PE of 22. 22 is the lowest band of their margins, and that's why I use it as my fair value assumption. Again, I pay 1 PE for 1% of their margins. Multiply this PE by the EPS, you'll get the fair value for the quarter. This is Apple's charts with the fundamentals relative to the highs and lows of the quarter: the PE, the price to free cash flow, and the PB ratios. This is already adjusted with their diluted shares reported quarterly. I've included the revenue and the free cash flow trailing 12 months here because that's the most important metric to look at for tech stocks. The free cash flow is very important. The black line you see here is the fair value for each quarter. You can see how it was trading so rich before the whole Fed tightening, and now everything is back to fundamentals. Currently, the fair value for Apple is around $134. I just want to make things clear: fair value is a range of reasonable price, not necessarily a specific price. The orange line here is the dividend yield. This is 1% at $92. Now, I'm screening this for the last time in this channel because I want to create content that's more engaging to investors. But worry not, because this kind of content will still be available on Patreon, just not in video form, because I can't find time to screen all stocks and make videos of them individually. I will be updating this every quarter along with my insights about the stock. Just visit my Patreon for more details. Also, I'm screening this stock because I'm seeing some problems in the next quarters to come for Apple stock. It all started with the Foxconn event. Apple actually released a statement about this, and as investors, we should all be worried and be forward-looking, especially when iPhone is responsible for 47% of their net sales. There will likely be a hit in their financials, especially their revenues and their margins, and that ultimately will affect how we approach the stock. I won't recommend holding this on earnings because it could get ugly. Now, analysts are still forecasting a little over 1% on the top line growth or the revenue growth, but a decrease in the profitability, the bottom line, or the EPS. They're forecasting a drop of 4% in their EPS quarter over quarter. Thus, this forecast of fair value here, this black line around $120. This fair value will only work if these criteria are met: revenue, EPS, and most importantly, their margins. They have to stay above 22% on both net income and free cash flow margins. If not, if we see margins below 20%, we could see more downside to this stock, and of course the whole index. That's my take on Apple. I just wanted to raise some caution on this stock. The effect of rate hikes still hasn't affected the demand on Apple products, but at some point it will, and it will affect Apple's stock price. See you next video.